Hey, welcome to the show, ATI Pro Media. We're live at 9 every day. Thanks for joining us. Glad to have you here. We're going to run through some headlines here. Markets are trying. We got a little green on some soybeans. Corn tried yesterday. Had a nice little day yesterday in the markets. We'll see where things go here. Flash sale today. Had some export sales out as well. Weekly export sales. What else do we have? Ethanol production. I'm going to talk a little bit about that. Yesterday, some numbers out there, cattle markets, drought monitor, and I guess USDA or the government employees fired, not fired, back in. I don't know. It's hard to fire people these days, but we'll talk a little bit about everything. We'll see where we go. Let's run through the markets. Rick, let's go to the ranch. Let's go check out some cattle. One of those cattle videos we got. Let's walk through those while I go through your markets. This one's perfect. All right. Set the tone and the mood here. We got to set the tone right. May corn down 2.5 cents, 453.5. May beans up 4 cents, 10.15 and 3/4, back above that $10 level. Good to see. Soy oil up 27 points. Soy meal up $1.90, 301.70 on your soy meal, back above 300. Chicago wheat's down 2 1/4. May at 546. May KC wheat down 1 1/4, 555 3/4. New crop KC wheat 569, down 1 1/2. And looking over at your feeder market on the meat side of things, they're dicey. Little disappointment here on the meat side of things. April down $1.72 at 274.35. Your March contract 274.20, down $1.90. Looking over at live cattle, April fats down $1.50 at 195.025. June down $1. Lean hogs a little weaker, down 20 points. Crude oil up 50 points, 66.75, below that $70 level. Heating oil, diesel market up 1.5 pennies, 225. Nat gas down 12 cents. And your S&P, the macro markets, that's where we're giving it all back. We had a bounce yesterday and we're giving it all back. The Dow is down 480, the S&P down 80, the NASDAQ down 347, the Russell down 32, Bitcoin down 425 points at 90,000. Gold's a little weaker, silver's a little firmer, and the dollar leaking weaker again, down 34 points. 103.91 on the US dollar index. Interesting. Connor B., come on, welcome into the show.
Oh, thank you for having me. I'm good. Are you wearing your K? It's funny how we can coordinate it. Is that your K-State shirt?
It's there's no logos. I'm logo free. Okay.
All right. I got my Illinois shirt on. It's almost March. Is K-State going to make the tournament?
I don't know. We're better than we were 2 months ago. So I don't really watch basketball. I'm not a basketball guy. I'm a wrestler, Connor. So
right. I got that in mind. Illinois, it was my, I had to temper my expectations, but I still got high hopes.
Okay. They're going to make the show?
They're going to make it, right? I thought they should have been. They kind of fit, There was a point where I was like, oh, do I need to bet on Illinois to win the national championship?
Yeah.
Time will tell. Hopefully.
Hey, you never know.
You never know.
Right. They got to show up at the right time and perform at the right time, put it all together. I'm willing to root for a Cinderella team. Maybe Illinois is the Cinderella. I don't know.
Oh, that'd be nice.
Yeah. All right.
We
got an export flash this morning. Start out with the bang. Good to see. Private exporters report sale of 20,000 metric tons of bean oil to unknown. Wow. Connor's spring break vacation destination. Unknown destinations. So good to see a flash sale. We love these. Bean oil, that's one that's on there. Bean oil, I think, has been a pretty good demand front on the bean oil side of things. So good to see that out there. Would love to see some corn and bean flash sales out there. Beans would be great. Corn would be, we need to see those on the corn side of things.
I'll take either one. We got to remember on, the bean export program, it's very much, it does one of this. It's a roller coaster, right? Is that when, the business really disappears very quickly here. Seasonally. Now, if South America doesn't have a crop, that's where things get interesting. They got a crop this year. It's just a matter of, is it big or is it huge? Corn exports, right? And we had exports out. But corn exports is a little more steady, right? The fall off is maybe, if we got a big safrinha crop, we're going to see a fall off late summer. But, we want to keep those corn sales going, and especially to Mexico. So we'll take anything, but, always keep in mind what, typically what are we going to see soybean corn exports? Obviously, go ahead.
Yeah, seasonality to those, right? I mean, there's just natural seasonality of when's that crop coming out, where across the world, and some seasonal tendencies there to definitely pay attention to. I'm gonna pull up that the weekly, looking at last week's exports. Corn 31.3 million bushels, up 15% versus. No, that's a bad stat. I don't like that. Yeah, within range, they're acceptable. They're solid across the board here. 15.1 on the bean front and 9.9 on the that's a week old, isn't it? That's 227. I didn't load the right one up, Connor B.
I got you here.
Pump your brakes.
Yeah, this week corn was at a 35.8, kind of very neutral, middle of the range. Soybeans were at 13, kind of the lower end of the range. There we go.
I loaded the wrong one, Connor.
No, you didn't have to say that. You wanted everyone to see where we were last week compared to this week.
Let's take a look back at last week. Now here's this. Okay. All right. So this makes more sense to me now, Connor. I had in my notes that corn was up 15% versus the previous week, and that matches up 35.8 million bushels versus 31.1. Then on the bean front, 13 versus 15.1. So in line there, I'd say so. Those are acceptable numbers.
Yeah, no surprises. Kind of a neutral export sales. So
yeah. All right. Get that out of there.
When we look at, I got a question for you, Brady. When we look at exports, right, as we've seen Mexico being a fantastic, they've been for basically 2 years, they've been above and beyond fantastic buyer of U.S. corn. And then the past 3 months they have as well. Now, I would say, is there any fear? Now, Mexico's president is set to meet with Trump, I think, tomorrow, today, and then if any type of reciprocal tariffs are going to go into effect Sunday. Is there any chance that we saw, are you nervous about increased purchases where we could really dip more than expected? That was a long question.
Like, will we see? Just talking about export sales going forward.
Did Mexico? Here, I'll shorten it. Did Mexico?
Did they front load?
Yeah.
Yeah. I don't know. I think I think the demand's solid, and I think they need it. I think when you look back, I'm not a pro at this. We'd have to ask our ATI research desk Brian Basting would be a fantastic person to ask about this. I'm not Brian Basting, but what I would garner from my visits with him is they've had shorter crops the last couple years, and they have pretty strong demand. And I don't know that they're necessarily front loading it, more so as maybe they are to some extent, but they also need the grain. So I think I don't know. They're definitely a risk. Anytime you slap tariffs on things and you have trade disruption, that's going to disrupt trade. But when you need the grain and you need the product, if you have the leverage, let's throw it on there, and then let's start negotiation. It's the art of the deal, baby. It's the art of the deal.
And that's the other thing is we've already seen, there might be tariffs are going on Mexico, but wait, we'll see some exemptions, right? I've seen that rumors where maybe ag products are exempt to tariffs. And
True.
So it's the same, we've mentioned tariffs probably every show, at least easily this week, maybe every show last week. But the story hasn't changed, right? It's very much a negotiating tool. We had the tariffs on, market took it negatively, and then we had, but wait, maybe Mexico-Canada tariffs are, set to be delayed, put off. So,
dynamic. It creates this environment in your markets that is unpredictable going forward and uncertain, and tons of headline risk out there. We're a tweet away from, talking about tariffs getting scaled back and the market's catching a bid, and everybody's waiting for that. We want to see that. But I don't know. Maybe they stay in place a little longer here, and a little uncertainty out there, but be prepared because these markets are going to move because of that uncertainty, and they can get out of whack a little bit. You can see them go too high or too low. But yeah, what we don't want to do is kill demand. And sometimes when you get doing this, you kind of kill demand. And it's hard to go back if I wanted a coffee yesterday, but my car was out of gas and I couldn't go get my coffee yesterday, I'm not buying 2 coffees today, Connor. Okay. I probably need a coffee. I got to watch my coffee intake, but you get my point there. Sometimes there's that lost demand, lost opportunity there.
Yeah. Great analogy. All right. Where are we going next? Where are you want to go?
All right, I like ethanol production. We had ethanol numbers out last week. Strong production number. Once again, that's been a shining light here. So there's some questions about margins going forward, especially when you look over at energy prices kind of softening up. But another banner week of ethanol production. That's a huge shining light here on your corn demand side of things. And then when we look at the stocks number, that was the big number last week. And we saw that stocks number just skyrocket up, second highest stocks, like on record, going back to I think 2020 type time frame. But we saw that pull back, so we didn't add to that stocks number. A little supportive there as well. So a little update on the ethanol front, but a nice positive story to talk about in a week where we need to find some positives.
And was it could you pull up that chart? It was an ethanol not that one. I moved too fast. Sorry. This one. Yeah. So it was not this week, but last week we saw that big jump, right? That kind of caught a lot of people off guard, that big jump in ethanol stock. So we're coming down from that. But yeah, good stuff.
Yeah, we're visiting about. I like it. Okay, ethanol's important. Drought monitor, a little more depressing. Let's go to that one. We'll do the good and then the bad.
I got to be honest, I didn't want to bring it up. I really did. But then I saw the change, and it is significant, especially in Central Illinois. So let's pull it in. Let's talk about it. Right? We get this out every Thursday. And so it's always interesting to look at. And so on the left is going to be this year, right, was where we are where we were last year. And so, continued, really looking at Minnesota, South Dakota, Nebraska, Iowa, right, a little bit drier, and a big change. I don't know if big is the right word, but a significant change in central northern Illinois where, we're a little bit drier than last year.
Yep. Yeah, definitely. You can see that on the year-to-year type change there. Some concerns out there. You get into that northwestern corn belt, Nebraska, Minnesota, Iowa, Dakotas. And I look at that eastern edge of Wyoming as well, too. So then creeping up into Texas, look down there in the south. Don't forget our boys down there. And down in that panhandle, some drought creeping in a little bit there. Looking at the 4-week change, 1 month change.
Look at Central Illinois there. Yeah.
You're on the map.
Yeah. So significant dryness, and trust me, I'm hearing it, Brady. A lot of people.
You boys can't handle drought. I know it. So it's like it didn't rain yesterday, and you're squealing. So
I can't say anything because you're probably right there, right? Kansas drought versus Illinois drought.
Got 4 inches of snow on the ground. You're scooping your driveway, complaining about drought, Connor B.
Okay, that's enough. All right. Looking at that, but I think we got to remember. Let's look at March 5th, 2024. It looks significantly dry. Remember how fast we got out of that, right? I think it was by June, July. It was almost the amount of corn that was in a drought was under 10%. I can't remember. So there's not, they changed very quickly, right? Any type of dryness is a concern, right? I know that, but just keep in mind how fast that can change.
Yep, definitely. If there's a time to be dry, February, March. We're not February anymore. March is a time to be dry. So maybe. And then, I don't know, speaking of dryness, so northern Brazil remaining a little dry. That's very helpful for getting the rest of that safrinha crop in the ground. So I think there's, definitely maybe some risk off with that sentiment of, hey, that safrinha crop is going. We've been updating you on that. And we'll get some new graphics out next week as we get updated on their planting progress down there. So. All right, all over the place. We're cruising through them here. What else we got on the books here, Connor B, to talk about?
Here's the headline that we saw is U.S. Department of Ag must reinstate 5,900 fired employees for at least 45 days per an order issued Wednesday by the Merit Systems Protection Board. So, right, we saw, was it probationary employees, right? If you worked there for under a year, something like that, right? We saw a lot of them get let go. They're kind of scaling them back. And so, like you said, maybe it's a little tough to get fired, but 5,900 employees for the U.S. Department of Agriculture coming back to work for at least 45 days.
Interesting. Yeah. Okay. Keep your eyes on that. A lot of dynamic things happening.
If they said, hey, you've got a job for at least 45 days, would you come back, Brady?
I don't know. I'm going to add up how much vacation time I got, maybe, kind of go through the books there and all right, let's extend that paycheck. Maybe they used it all up before they got kicked out the door, though, too. I don't know. But in all seriousness, yeah, interesting stuff going on that front. So, 45-day job, though. I don't know.
Talk about
that's an extension to update your resume, maybe. I don't know.
There you go. So, all right, you want to give us a quick cattle update? If we got any questions, we can answer them and get out of here.
I like it. Yep. Sounds good. Cash kind of leaked a little bit weaker on early trade. It's called a steady to weaker here for the remainder of the week. Light trade happened so far, but called steady to weaker. The cutout is trying to find some demand and stability. But the choice cutout did slip yesterday, $1.33. We're at 313. I believe we're about 60 cents better than we were a week ago on the cutout. So just trying to find some stability here. Yesterday we did a premium, talked about the meats and kind of walked through the cutout, the components of the cutout, and looking at prime choice spread, some seasonality stuff with that front, and just factors driving your cattle markets going forward. LRP is a good tool. Been talking a lot about it. Yesterday we closed on contract highs for September, October, November, January feeders. Yesterday they posted contract highs. So great opportunities out there to go look at next calf crops protection. If you're interested in LRP, hit us up. It's a great foundational risk management product. It's a starting point. Okay, government subsidized floor, starting point, pay on the back end, and then as the market moves, once you're in control, we've talked about volatility, the ability for these markets to move. That's when you have fun. Once you have control, you can have fun with the volatility and manage those positions. So, good stuff. Yeah, I'm patting myself on the back. I said good stuff to myself. So.
It was. Hey, you beat me too. You knew I was going to say it. Here's the one thing is that it's a good thing about going live. We got corn kind of catching a bid, Brady. We got May corn up 7. I was looking to see
that's a big jump.
I was looking. Probably. What you quoted at? I think we were down 1 or 2, right?
Yeah, we were down when I quoted. It was red. So yeah, complete flip there. 8-cent flip while we're talking. Keep talking, Connor. This is good for the markets. It must have been the ethanol number. We were talking about the strong production on ethanol, good exports. Just don't underestimate. Yeah, don't underestimate the impact that we have here, Connor B.
Yeah. So, yeah, good stuff. Wouldn't mind. Not gonna lie. When we get into March, April, May, let's talk about old crop. Let's get if you don't have anything sold, right? It's a big piece. But I go to the new crop, Brady. I'm looking. It'd be nice to see that D's corn. It'd be nice to see a close above 450, right?
Be huge. Yeah, need to claw back to that level. Can we do it today? Can we do it this week? I think it's a must do this week. I think you got to close Friday above 450. We got to claw back.
Yeah, let's see it.
That's something to cheer for and root for. We got any questions to roll through, or we got a silent crowd out there today?
I don't think we.
Whoa. Grow the farm up. Here we go. Can you package a new product called the Trump put option?
Be careful. We'll get these OTC companies they can roll out anything and they'll call it whatever you want. So they'll probably have one of those, right? They'll call it headline risk protection or something.
Yeah. They used to, in the macro markets, they talk about the Fed put and, rate type stuff, and that, the Fed won't let the economy fall apart. So they talk about the Fed put there, but the Trump put, interesting there. And you got to think, if we hammer those ag markets too much, the MFP CARES type packages, those types of deals are going to be pumped out to our ag producers to offset damages. But you never know. I wouldn't want to count on that. I'd want to do a great job of marketing and then have that as my icing on the cake if that were to come down the road. That's my thought, though.
Yep. And, no Trump put option, but we do have the government put option in the form of crop insurance, right? You're making those decisions in the next couple weeks, right? You and I, we were talking last night just about, the ECO, right? That ECO coverage is a big
hot topic.
It's the hot topic, right? It's 20% more subsidized, or 25, whatever that number is. And so, to me, it's not, if you want it, if you want that revenue protection, if you're worried about the yield, take the ECO, right? We don't sell it, but if it makes sense for you, do it. But then
do your own numbers.
I think it's more of a decision to me to make than maybe some people let on, right? Do we want the extra, do we need that 95% yield protection, or do we need a piece of the puzzle that maybe protects us a little bit more on price?
Yeah. I'm not a pro in this space, but some things that stand out to me you don't want to it's probably a great product. I don't want to knock it, but you got to paint both sides of the picture here too. The fact that it's county based, that's something that's out of your control a little bit, that maybe doesn't apply apples to apples with your farm. And then what if your county out yields your county average? And so is it really, where, if you compare it to like a put spread of some sort or something, raising is it a $4.40 put spread, or what is it? If you compare that, but with the dynamics of your county could out yield, so does that really shift the bar? It's kind of a dynamic put spread. Make sure you know what you're getting into there, and what you don't want to do is get sold something thinking it's something, and at the end of the day, when it settles up, it's not quite what you thought it was going to be.
Yep, exactly. That crop insurance, it's a little bit, it's like a teeter-totter, right? As the yield gets better, the price can get worse before we hit that revenue guarantee, and vice versa, right? If the yield gets worse, right, it does the opposite. And so, yeah,
I love yeah, it's the rock star graph. I mean, you've got all these graphics, Connor, and I love them. They're fantastic. Paints a great picture.
Yeah, good stuff.
I had one other thing on my list before we peel out of here. But the Fed, the TART rates getting priced, and this is the Fed watch tool, and we've kind of seen that shift a little bit. The current is the dark blue. That's today's, and this is looking out to Dece, the number of cuts we're going to see till Dece. So I think we're in this 4.25, 450 level right now. So looking at 2 to 3, there's an increased chance over the last week and month that we're going to see 3 cuts according to what people are pricing into the markets out there. It was 2, and now it's pivoting a little more towards 3. And this is a good graphic that kind of illustrates that pivot. Something else going on, another piece of the puzzle that creates a dynamic situation.
And it's one we don't talk about, we don't talk about it a lot, but it is a huge piece, right, of ag, of, making our decisions, right? We're talking about, is it better to convert the grain to cash and stay long in other ways, or do you stick it in the bin and cash it, right? Those are, sometimes making the decision is not, well, I think the price is going lower, I need to sell, right? It's a little bit more dynamic than that, I think.
Yeah, and you highlighted that in a couple premiums ago, where you talked about last year's marketing of post harvest versus this year's, and what's the basis telling you to do if you want to stay long the board, and then how do you define that cost to ownership? And this year's a clear example. Both years are clear examples of it. I mean, last year you rewarded, and thank goodness the calls expired worthless in March. Thank goodness you sold in the fall. This year, thank goodness you had the calls on, and you had a great basis in the fall to reward, and you got to benefit in the futures upside. Good stuff. Yep. One more comment from Grow the Farm up here.
SCO, ECO seems like products stacked on top of products. That's what it is, right? You got to take out your individual revenue policy, and then you put the SCO and ECO on top of it, right? So, I agree. Doesn't mean, again, it doesn't mean I'm not bashing them or anything, right? If you need that revenue protection, guess what? Take the ECO.
It's a great tool.
It's there. Yeah.
Yeah.
So
yeah.
We don't talk much about SCO, right? The big thing is that if you're taking SCO, you got to take that price loss coverage on the back end. That's one thing, but it seems like ECO is definitely right. That bigger subsidy level, that's definitely the focus, right?
Yeah, this is getting out of my wheelhouse big time, but ECO is definitely the one I hear a lot about.
Here's a non-crop insurance agent explaining it. They're in the same vein, right? You can buy up your protection. They're both county based, I believe.
Okay.
I'm sorry if SCO is not county based. No one correct me, please. But they're along the same thing, right? They allow you to, if you can take an individual policy and you can buy up.
Yeah. Okay. Yeah. Well, a lot of choices out there. It's good to have choices, and I think at the end of the day, farmers have never had more choices to manage risk and to back up their marketing plans. But yeah, know what you're getting, and be careful out there. Sometimes things get oversold, overpromised, and underdelivered, and you don't want to be a victim of that. So
yeah, and that in any marketing, crop insurance, what we do, anything complicated doesn't always mean better.
True. Good point. Yep. All right. Well, let's get out of here, Connor B. Another fun day here Thursday. We'll be back Friday. I'm excited to see what the markets bring for us Friday. Grain's still pretty firm here. Corn up 6, beans up 11, wheat's up 4 cents. Feeder cattle yeah, they're still the dog of the bunch, down $1.70. But you can't win every day. You can't win at everything. So, all right, I'm going to click the button and get out of here. Thanks for joining us today. Appreciate y'all. Have a fantastic day. We'll see you tomorrow.
See everyone.